Welcome to everyone. In this week's video you will learn how powerful and profitable are the cycles, and how to use them to trade the gold market to increase your profits. This week's video will cover the gold market for the week of July 1st, 2024. Before we start, make sure you read carefully the disclaimer. The April 12th the gold market made an all-time high at $2,448 and the GLD ETF $225 the same day. Since that high, the gold market started a correction. It's been a while since I made a weekly update on gold. The last one was on May 20th. For this reason I will start this update with the 20-week cycle. This will give a better perspective on the longer-term picture. In this update I was expecting the gold market cross below his 20-week cycle line, providing a potential downside target, on his way to form his 40-week cycle low. On the week of June 2nd, as expected, the gold ETF GLD crossed below his cycle line at 215 for a potential downside target at 205. The 20-week cycle trough is expected to occur around mid-July. Unless we have a very sharp decline on the gold market, there is a very high probability the gold market won't reach his target by mid-July. When we will know the 20-week cycle trough has formed? When the gold market will cross back above his 20-week cycle line. This week the cycle line is at 216.55 and the potential upside target if the gold ETF cross above this week will be 220.98. In the meantime, for this week, the 20-week cycle trend is down. The success rate is 100%. Let's see the 80-day cycle. Like I mentioned in my previous update, the May 3rd low was the 80-day cycle low. This cycle was 78 days long, 10 days longer than the average. Hurst nominal model, the length for the 80 days is 68 days. This 80-day cycle low found support on his cycle line as expected. On the same update I was expecting the next 80-day cycle forming a low mid-June. But since the cycles run little bit longer is now expected on mid-July. This low will be the second 80-day cycle since the last 20-week cycle on February. And according to the Hurst principle of synchronicity, this low will also be the end of the 20-week cycle. Let's see the roadmap. Just as reminder, the cycle line used on the roadmap is the 20-day cycle line. Since the last 80-day cycle was on May 3rd, we are right there. The gold ETF is on his way to form his last 80-day cycle low, expected on July 10th. For the details of the May 20th roadmap I recommend to watch this video. Now let's pretend the 80-day cycle low is on time and will form a low on July 10th. We can try to establish the next roadmap for the next 80-day cycle. After forming his 80-day cycle low on July 10th, the gold market will cross above his cycle line, providing an upside potential target for the next 20-day cycle. Then after forming the 20-day cycle peak, the gold will start a correction to form a low on July 27th, finding support on his cycle line. If the gold cross below his cycle line at that time, this will be the first sign of some weakness of the gold market. Then the gold ETF will rally and form his 40-day cycle peak. To stay bullish, the 40-day cycle peak have to form on the right part of the 40-day cycle. Then after his 40 days peak, the gold ETF should cross below his cycle line, providing a downside target for the 40-day cycle low on August 13th. After the 40 days low, the market will cross above his cycle line, providing an upside target for the 80-day cycle peak. After the 80-day cycle peak formation, the gold ETF should cross back below his cycle line, providing a downside target for the next 80-day cycle low, forming a first low around third week of August. Then rally toward his cycle line, using it as resistance, before heading down to September 16th to form the 80-day cycle low. On June 18th, the gold market crossed below his cycle lines at 213.35 and 214.51 to form a target zone between 203.36 and 201.04. Here are the resistance lines and their potential targets if the gold ETF cross above this week. If the market crossed above his cycle line without meeting his target, this will be very bullish. The success rate for the 80-day cycle is 50%. Since we are close to 80 days cycle low, the cycle trend is down. The 40 days cycle. The last 40 days cycle low occur on June 7th with a low at 211.60. The next one is expected on July 10th. On June 4th, the gold ETF crossed below his cycle line at 217 and 216, providing a downside target zone between 208.90 and 207.84. So far, the target have not been reached yet. Since the crossing point, the gold ETF is still below his cycle line. Here are the resistance lines and their potential targets, in case the gold market cross above this week. This week the cycle trend is down. The success rate is for now 75%. The 20 days cycle. The last 20 days cycle low occur on June 26th and the next one is expected on July 12th, the yellow zone on the chart. On June 26th, the gold ETF crossed below his cycle line at 214.86, providing a potential downside target at 210.98. What's next? The gold ETF should find resistance on his cycle line, then decline to form the last 20 days cycle of this 80 days cycle. This week the cycle trend is up. Since the beginning of the year, the success rate is 75%. The 10 days cycle. The last 10 days cycle formed on June 26th and the next one is expected on July 2nd, this Tuesday. On June 25th, the gold ETF crossed below his cycle line at 215, for a potential downside target at 212.40. Next day, on June 26th, the gold ETF meet his target with a low at 212.12. This week the trend cycle is down. So far the success rate is 93.33%. In conclusion, we start to see some weakness in the gold market. The second 20 weeks and the 40 weeks lows should form very soon. Mid-July is ideal time for this first 40-week cycle of the next 18-month cycle. Technically the market should find support on his 40-week cycle line. But since there is lots of bullishness, this will be unlikely. If you like this video, please click on the like button and subscribe, to make sure you don't miss any future important videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.